returns over the last 6 months, but we have seen that the rupee actually has had an impact over the last couple of days on a bunch of stocks and spaces. Something like an IT currently trading 89.21. You did see the RBI coming in at the end of Friday to give some positive impetus by selling dollars, and that's what the our banking editor Vishwanath has been highlighting since a couple of days. But largely, when you focus on companies and sectors, there are a couple of them like IT, upstream oil and gas, as well as city gas distributors that always come in focus at the time of rupee depreciation. So it does make import costly as well as increase the cost of debt. But historically, rupees 1 to 3% depreciation versus the US dollar, the euro, or the pound favors the IT companies positively, because this depreciation leads to higher margins for the company, which can be further used for them by them to increase their competitive intensity in the global world as well. That's one of the key impacts. When you look at the companies, something like an LTI, Mindtree, Wipro, Sagility, as well as Coforge continue to be in focus because of the higher exposure to the US dollar, euro, and pound revenue coming in from all these overseas entities. But also keep in mind something like a persistent, Indogene, and Emphasis are the other key beneficiaries because of the higher exposure to the dollar as well as the US economy. The gas space, though, is not as simple because there are multiple key levers. There are mixed impacts amongst this, because while there is a positive impact on the upstream oil and gas companies, city gas distributors as well as oil marketing companies do bear the brunt in this particular time frame. When you look at the first one, which is of course the city gas distributors, you see a negative impact on them because brokerages largely estimate that a rupee change compared to the dollar in terms of depreciation impacts something like an enterprise gas EBITDA by almost 4.9 to 5%, while a similar impact is seen on MGL, Mahanagar Gas, by 2.6 to 2.8%. Pardon me. Gujarat Gas is the other one, 1.7 to 2% is what is seen. And when you look at the upstream oil companies like Oil India, someone like ONGC is also a key beneficiary in this particular aspect. And Oil India is slightly more sensitive to ONGC because at 1.4%, they do get a positive impact on the EBITDA margins, while that is 1.2 for oil and gas companies. Amit, let me come to you very quickly on this. In the short term, any of these names in the oil and gas space that someone could keep on their radar because of a rupee depreciation impact that could happen even further going forward?
If you look at the overall setup from the OMC space and the oil distribution space, we are seeing that from last 3 to 4 days of trading session, there is some sort of a supply being witnessed from the stock specific front, but still the support is not getting broken out in any of these counter. If you look at the IOC, oil, GAIL, BPCL, HPCL, all the counters are holding their support strongly. So we should wait for any new short position to get created at this point of time. We can expect some reversals in oil and HPCL at this point of time.